Welcome back to the channel. I'm Jacob Fisher, and today we're talking brokers, specifically interactive brokers, who I think most people should use in this post-Robinhood era. Interactive brokers has been around for quite a while, but it wasn't until recently that they developed a platform for a new investor like yourself and myself. With this new development, they started an ibkr lite plan, which offers commission-free trades among many other things. Let's not waste too much time and just get into the review of interactive brokers, but make sure you tap that like button and subscribe for future content like this. Let's just break down this video into a few sections: commissions, features, and user accessibility or interface. Then we can get into the main reason why I like them as my current preferred broker. Unfortunately, they do not offer a free stock, but you can click the link below and you can get $1 or 1% based on how much you deposit. It's $1 per every $100 you deposit with them. They have 3 options for commission rates. You can either go with tiered or fixed for the paid versions, but more often than not, these are for active traders. If you are paying to trade, then generally you have more knowledge about investing and you are looking to get some of the pro features like interactive brokers smart routing. I can't say that word. With smart routing, you can get IB to decide where to route your order, or you can decide your personal routing preference. If you trade millions of shares in a month, then consider the tiered. But if you're just looking for a platform to trade and invest long term, then consider the free option where order execution matters less. Arguably, if you're going to hold a position for months, then 50 cents on the order or quickness in the order execution won't matter too much. So you can either choose free, tiered, or fixed rates. I chose free on the lite plan. But let's move into the features of the platform, and there's quite a few, but most importantly is the ability to invest with fractional shares. This also means you can enable DRIP, or dividend reinvestment program, to invest back what you get in dividends from stocks back into the same stock. With fractional shares, you can invest $100 into Tesla or Amazon rather than having to buy a single share and use up $800 of your buying power, or whatever price Tesla's at right now. You still own a portion of the company, but you can spread out your investments more, a little bit easier. Fractional shares are one of my most recent requirements when I choose a brokerage to go with, and I think it's a great option to have. I personally invest $100 a time into a stock, and it's great just to, have it sit there and not worry about buying whole shares. You do need to enable it though before you use it. One of the next best features that they have is low margin rates, if you want to call it a feature, that is. If you don't know what margin is though, it essentially allows you to borrow money to invest in. A $1,000 cash position that goes up 10% would yield you $100, but a $2,000 margin position with $1,000 cash, $1,000 margin would yield you a $200 gain rather than the $100. This also works in the opposite ways if the stock goes down, which is why it can be super risky to use. Either way, if you anticipate making 5% a year with the dividends and margin is only 2.5%, then it makes sense to consider using it because you make an extra 2.5% a year using margin. Interactive brokers' margin rates are some of the lowest in the business at 2.57% for the lite version, and anywhere from 1.57 to 0.75% depending on your portfolio balance with the pro version. You can use their cash management to sort of take a loan against your portfolio at the low rate as well. I guess if you had a $1 million portfolio, you could take a $500K loan for a house at 2.57%, which might beat out some banks' interest rates. That's an extreme example again, but you could consider using it for cash if you really needed the low interest rate loan against your portfolio. Big name brokers like E-Trade or Schwab charge anywhere from 3 to 9% with margin. So in those cases, it doesn't make too much sense to, use that margin if you don't anticipate making well over 9% a year. For those advanced traders looking to short stocks, they do have a great short list and an ability to locate shares to short of hard to borrow stocks. For those on the opposite end of the spectrum, not looking to short, you can earn extra income by lending out your own shares of stocks. If you owned 100 shares of a hard to borrow stock, then you can earn 50% of the income that interactive brokers makes from lending out the stock. If the rate is 10%, then you'd make 5% of the cash value of your position. So it's a neat way to make a little bit extra on your positions. Let's get into the user accessibility and the platforms they have to trade with. They have mobile, desktop, and a web version for those looking to just use it on Chrome or Edge, probably not Internet Explorer. The mobile version is pretty easy to understand. You can say your daily P&L and then the net value of your portfolio, which excludes the value of your margin positions. So if you paid $100 for Tesla, but you're up to 110, then the value would go up by $10 since the margin value is 100 and it's margin, it's not a cash position. You borrowed that money, right? To make a trade is super easy. You find a stock you want to invest in, let's say Shop. You hit trade, search for Shop, and then click on the stock position. Hit buy at the bottom and then choose your quantity. You can easily set defaults, and I've chosen $100 for mine, and I use it in dollars rather than shares, and then you just slide over and you buy it after you click the accept button. You can also see your impact, which rates your investments based off your personal values. I've set mine to be sustainable, and you'd think with stocks like Tesla I'd end up with an A score, but I guess not. Even weirder, my alternative energy ETF is only a B score. Whatever, I guess, right? Just a little neat feature. The web version is remarkably similar to the mobile and how it works and feels, but the desktop trader workstation is wildly different because I think, it's just so different and honestly difficult to get a hang of if you're just starting out. I would suggest that most traders don't use it. For active traders, just play around with it, but it looks like it might need to get an update to be a little more modern. Depending on what you think of it, of course. You can do a lot with it, like scan the whole market for specific stocks or develop a complex option trading position. All great to do on an advanced level, but most people just looking to invest should stick to the mobile app, which works really well. I chose Interactive Brokers because it beats out Robinhood's margin rates and it allows for fractional shares. It also allows me to buy stocks that I want rather than being restricted because they don't have enough money for the clearing firms. Just another thing about them. Let me know your thoughts and in the comments below if you like Interactive Brokers and if you'd invest with them or not. I upload videos on Monday and Friday on travel and finance. If that sounds like something interesting to you, hit that little subscribe button down there. Thank you so much for watching, and until next time.